Yeah, good evening, my people. This is Adejo Adewale, the founder of Home of Trader. Like I promised that I'm going to teach people on how to trade without using indicator. But before I start it, let me quickly stress important thing here. Majority are looking for magic to survive in the market, but I must stress that there is no magic about this particular system we are talking about. It's all about knowledge. If truly you want to change your way of trading and you want to trade successfully, I will advise you to watch this video to the end. Not only that, subscribe to my channel because this video is in section. This is just the introductory part of it. I will be discussing the foundational parts of what you need to know, which are important. Some of us may have known this, but still don't let us neglect it. In every information, of course, there's a knowledge to pick from it. Therefore, I will advise every one of us to ensure that we watch this video to the end, subscribe to the channel so that when and click on the notification bell, so that each time I upload a new video, you will be opportune to know on time so that you can follow up. This thing has part 1, part 2, part 3, and so on. And you really need to follow up if you actually want to understand. But let me stress that why majority of us are not doing very well when it comes to trading is simply because we are not determined enough. We are looking for a system that will work like a magic, but sincerely there is no magic anywhere. We first of all need to have a basic knowledge of this thing before we can move on. I'm going to start by sharing my chart. Firstly, I will assume that we all know what this trade is all about, but at the same time I will still want to talk about some certain things we need to know, which is the basic market structure. That's what we call it, the market structure. Let me type and then so that we can all see the market structure, the basic market structure. Now, when we talk about market structure, what exactly are we talking about? Market structure is telling you how the market is moving. It's what we need to understand. If you don't have knowledge of how your chart is moving, there is no way you can trade successfully on your chart without the use of an indicator or whatsoever, like we agree to work on. So firstly, what we need to understand is how the market is moving, and that will help us to be able to know what to do. Let me quickly stress that if you understand how market is moving, that's what is going to give you an edge in the market. Now, under the basic market structure, which we are going to discuss this night. Now, market structure has 3 types, to be sincere. We have 3 types of market structure. Let's look at number 1. We're talking about the trending market structure. Number 2, we're talking about the ranging market structure. And lastly, we're talking about the choppy market structure. These are the 3 types of market structure we'll be looking at this night: the trending market structure, the ranging market structure, and the choppy market structure. Firstly, let's start with the trending market structure, which is divided into 2. The trending market structure is divided into 2. Please, I want us to follow me, please. The first one is we call it the bullish trend. The second one, under trending market structure, we call it the bearish trend. The bearish trend. What is a bullish trend? I want us to listen very well. This is very informative. What is a bullish trend? A bullish trend is a kind of trend that have a succession of higher high A bullish trend is a trend, a kind of market structure that have a succession of what? Higher high and lower high. What am I saying? Let's take for instance, if our market is starting from here, okay, this is the method at which our market will be moving in a trend. This is a trending market. Market that is going up, we call it a bullish trend. Okay, now I want us to listen very well. This is the low where the market is starting from. We call it low. Let me increase the font size for us to see. Okay, this is the low. Okay, this is the high. This is the high. Okay, now if this is low and this is high, here will be called, here is not in the same level with this, therefore we call it lower but high, because it is lower to this high here that we have here. I believe we are following. This is lower to this high we have here, this high we have here, and of course it is higher than this low we have here. Therefore, in this particular case, we call it lower low. We call it lower low. So here is lower high, sorry. We call this side a lower high. I believe we are going to enjoy this class if we are determined and able to watch the video to the end. So this is lower high, and then here is called again higher high. Why do we call it higher high? It is being called an higher high because it is higher than this particular height we have here. So it is higher to this one. Here is lower, but lower than this one, higher than this area. So we call it lower high. We call here high, then lower high, higher high. Then here is going to be another lower high. This is called a bullish trend, which we call uptrend. Generally referred to as uptrend. Here again is another higher high that we are having. Okay, here is another lower high. I believe we are following. Okay, we have another higher high here. This is how we can identify. This is another lower high. Okay, this is a higher high. This is lower high. We have another higher high here. Now something happened around this side. At this level here, from here, if you observe what we have been doing over since, you discover that this did not meet up with the level we have here. I'm going to show us something. You see that the levels are higher than each other. They are not in the same level. This one did not meet the level of this one. This one did not meet the level of this one. This one did not meet the level of this one. This did not meet the level of this one. But here, the market has met the level at this particular place and broken it out. This particular junction is what we normally refer to as we call this place that the market was able to beat the lower low and form another lower level. What we call we call it break in market structure. We call here break in market structure, which in a short form we normally shorten it to the BMS, break in market structure, BMS. Once we are able to identify this break in market structure, it simply signifies that the uptrend has ended and downtrend is what is starting. What it signifies is that the uptrend has ended and downtrend is what is starting. That is for a bullish trend. And that is why when you see people that are trading trend, the trend trader will always come to this place to draw their trend line from below like this and join it like this. And they will tell you, once it breaks the trend line, they will tell you they are trading a trend line or breakout. So people tell you they are breakout trader. So what they do is that once this was able to break the trend, they continue. As it stands there, for those who also want to follow this trend, all they need to do is to keep entering at the test of this support. To keep entering at the test of this support. To keep entering at the test of this support. These are the major problems majority are facing. Once they see the market is going up and they buy, once they are trying to go long and the market reverses and start going down, they will quickly close their trade and say, oh, they are monitoring my trade. And by the time they close it, the market starts going back up. Why? Majority lack the knowledge of how market is moving, and as such, they don't know what is happening in the market, and that is why they find it difficult to cope in the market. This is for a bullish trend. Let's look at a bearish trend quickly. In a bearish trend is a succession of lower lows. Let's see, for instance, market is coming from up like this, okay, going down, because bullish trend is what we call, generally referred to as downtrend, up, down, then probably up. Now in this case, what we are seeing here is that we are seeing this is our high, this is our high, okay, and then here we'll be seeing as our low. Here is our low where the trend started. Then here we have what we called higher low. It is higher but still lower to the first height. Here is called lower low. It is more lower than the first low height that we are having here. So here is still higher than this place, but still higher low. Is not as high as this one. So we keep having succession of higher low and lower low. Lower low, higher low, lower low, higher low, then we have lower low. Now at this level, if you're able to draw your line around this side, you are going to see that this level beats the previous higher low, and as such, because it has broken, if the market did not get here, if it comes up and didn't get here, it goes down, the downtrend still continue until it's able to beat this particular junction here, this junction we are having here, and that is only when we can say there is a break in market structure. Our BMS, this is our BMS here. Break in market structure will happen around here. BMS, our break in market structure will happen here. This is our break in market structure. If you want to use trend line, we can use an arrow to pick from here and we draw down, okay. And when we are in a downtrend, of course, the major reason why majority keep blowing their money away, they don't understand what we call market structure. By the time I get to top-down analysis, you will see the importance of understanding the market structure and going exactly in the market direction. When you are trading against the market maker, there is no way you will not blow away your money. There is need for you to trade in the direction of the market maker for you to be successful as a trader. So this is a downtrend, and we call it the bearish trend. Uptrend is called bullish trend. Uptrend is succession of higher high, while downtrend succession of what? Lower low. So when you keep having lower low, lower low, lower low, lower low, that is a downtrend. Okay, we have been able to talk about trending. Let's talk about ranging. So we're talking about ranging. Don't forget, this is a video to Home of Trader. I need to write this boldly here. Home of Traders. Okay. If you actually have any reason that you need to contact me, my phone number is always available. I am open to anyone. If you have any question to ask, feel free to ask me a question. That is my personal contact. And in case you are out of the country, you have to add this to it. Feel free to contact me anytime. I am always available to answer questions. Just feel free to ask me. Okay? Yeah, we are talking about ranging market. What we refer to as a ranging market. Ranging in a nutshell is very simple and then easy to locate. It's more like something we have like this. Sometimes we call it a channel. Sometimes we call it a pipe. A piping pattern of a market structure is what we normally refer to as ranging. Something like this, whereby we now have okay, let me just say we now have market, going in this direction, like from this channel up, comes down, go back up, comes down, go back up, down and up, before it will now probably eventually break out from this thing and move up. This is a ranging market, which is having, before you can decide to see or confirm that a ranging market is actually successful, first of all, these are things you need to watch out for. You label here 1, you label here 2. Once you have this confirmation of 1, 2, and 3, then it is assumed that this is a ranging market. All you need to do is to put your trend line here, and be waiting for the market to come back to retest here. At this level, which you normally call support level, you will see a pin bar, such of rejection or candle pattern, which is going to tell you the market is going up before you buy. You buy, you take your profit around here. The rule says that take your profit at 50 like this. Your profit should be taken as here like this. But sometimes, if you are very sure of what you are doing, you can take your profit around here, you close it here, you enter another one, and like that. But mind you, when market is going to break out from the range, no one can say. And that is why, if you see those who actually a real trader, we don't trade ranging market. What we look for is swing market. We have intraday trading, which I'm going to discuss with you in the next subsequent videos that will be coming. This is a ranging market. Let's quickly look at a real chart for all these things we have been discussing since. In our real chart, so we are going to look for succession of downtrend. If you look at what we are having here, this is a downtrend. To get it clearly, learn to zoom out your chart completely. This is a downtrend. If you look at this one, this is an uptrend, which I'm going to show you now. If you could remember, I mentioned it that when you have something like this is uptrend. Okay, market keep going up and down. If you look at it here, you see that around this side, this is our low, our L, this is our H. Okay, we keep having it, it keeps coming down, it keeps going up, coming down to kiss the chart, keep going up, down. This is uptrend. We have higher high, we keep having higher high, keep having lower high, keep having higher high. And when you get to this place, you will have experienced some sorts of ranging. In this ranging, for those who know how to trade ranging, it's sort of a choppy market. This is a choppy market. The source of irregular movement in the market is called choppy market. I didn't mention that before. And when you see this kind of thing, you'll have seen people who will have drawn their trend line around here. No, don't let me use this one. Who will have drawn their trend line around here and be waiting for a breakout. Who will have drawn their trend line around here and be waiting for a breakout. And that was exactly what happened here. Not only that, you discover that the market still not conclude that the market has broken out until you are able to experience what we call the break in market structure. The break in market structure, which is going to come from here to here. As you can see, after the market comes to have a break in market structure, there's a kind of source of choppy, that is which we call a retest. You might call it a retest. Market won't just break away, it will come back and retest the joint at which it has broken and keeps going down. As you can see, the structure of the market changed from uptrend to downtrend. The structure of the market changed from what? Uptrend to downtrend. Oh. Okay, once I move the chart now, the whole thing will scatter. But as you can see, we're no longer in uptrend now. We're now moving to downtrend. So I'm going to clean all I have here. Then we'll be able to move on to downtrend. Right, let's see. You see what happened? The market changes direction from uptrend to downtrend. As you can see. Can we see this? Now look at what I'm saying. Because the previous, in this downtrend, exactly what happened here. Here now we have this. Forgive me. Okay. Here now we have this. Okay. And we have this as our low. We have this as our height. Okay. Here we have lower low. Okay. We have lower high. We have lower low. We have lower high. We have lower low. Okay. We have lower high. We have lower low. Okay. We have lower low. After that, you should see that market tempts as if it wants to go up, but it was unable to beat the previous lower high. This is the previous lower high. Because market was unable to beat this one here, as you can see it. Because market was unable to beat this one here. Can you see? Market was unable to beat it. Okay. Now market begin to be choppy around that area, which means that there's going to be continuation in downtrend, and that was exactly what market keeps going back down. There's no change, there's no break in market structure yet. In as much the market is not able to break this level up, like I show you from the beginning of the class, therefore market will continue to go down. Market will continue to go down. So for those who understand this structure, will be able to predict or able to draw their bias, the market is yet to go up, that is still going to be in downtrend. These are things we normally watch out for, and we normally use it to determine the direction at which the market will continue. Your inability to determine the direction of the market will make you place a trade blindly, and you are going to what? To lose. Remember, this is the first class. More class is still coming. So there is need for you to actually what? watch this class to the end, and give me a comment, chat me, contact me if you need any information. If you need anything that you are not clear of, just ask me. If there's anything you are not clear of, ask me. You can chat me up. My link is right there in the video below. You can always contact. You can join my channel. I have Telegram channel. I have WhatsApp channel. If you are interested in registering new accounts, my link is equally in the channel below. If you are interested in the buying, screw, BTC, or looking for where to buy, of course, I have a link below that can direct you on where to buy that are reliable. If you are interested in loading your trading accounts and you don't know how to go about it, I have a reliable agent. Just contact me. Definitely, I can tell you and guarantee you that you won't regret if you contact us for any of this information. And again, importantly, subscribe to our channel. Share the video to your friends. Don't be greedy. The fact that we are not greedy, we are giving you this information free. Don't be greedy as well. We'll see you in the next class. Once you finish watching this and this number of targeted watch is able to meet up with targeted watch, I will do the second video as soon as possible. Your comment and your contribution will determine how fast we will go with this. Good day and nice watch.